Yes, and we are live. So I have to wait a few minutes because it usually takes a few minutes for everybody to get here. So in 3 minutes, I'll start. Yes, so I think that we can start. So first of all, this has probably been the one of the lamest weeks I've had trading. There's absolutely nothing has happened in, or the trades that I planned for have not occurred. I think most people are focusing on the cryptocurrency market because those are exploding at the moment. So usually I don't trade cryptos on a daily basis, not day trading. I have invested long term in two cryptocurrencies, and that will probably be it. Maybe Bitcoin, if it falls towards the 40,000, I'll start. I'll make an investment in that for the long term. Otherwise, it is Bitcoin and Ethereum that I have invested in, and then I basically intend to hold for at least for 2, 3, maybe 5 years. So depending on if I see the market starting going the wrong direction. At the moment, it is still doing very well. Those two cryptocurrencies are the ones that are, I think, most stable at this point. They have a very supportive at the 50 and the 20 expansion moving average, and every time they basically drop to those points, they bounce. So as long as that is going to be the case, they will continue to go higher. But we'll start by looking at the technical indicators. So what I'm doing for every session on Friday, I'll take one technical indicator that I usually use, and when I basically gone through all my setup, I will take additional technical indicators. There are probably hundreds of technical indicators that are available on TC2000, and to be fair honest, I don't use all of them because it's just not necessary. The technical indicators that I have on the screen at the moment are the ones that I use, and I think it is more than enough to use. For example, I have 1, 2, 3, 4, 5, and plus the moving averages as technical instruments that to determine a trade, and that is more than enough. Most of the time, I look at the Bollinger Band and the RSI, and then after that, the other three technical indicators and determine the momentum of the trade. So today I'm going to discuss the CCI. So this is the Commodity Channel Index. Usually it was basically made for commodity. That's why it's called Commodity Channel Index. But it is very useful. It's not a lot of traders that use this for example, foreign exchange, for commodities, no, for stocks and indices and so on. But I found it extremely useful together with the stochastic and the MACD. So the way that this works, it is also a oscillator, and it has two areas of where you should be interested in. So for example, the top of the bar, we first have 0 here, the midline. Then we have the histogram, that's basically the price action. And then we have plus 100 over 0, and then we have minus 100. So when this histogram goes above 100, then it's a sign that is very bullish. When it goes below 0 and past minus 100, it becomes very bearish. So that's how you should interpret it. For example, here we are way past 100. We're at 174, and you see that we have a very big green candlestick here where we are very bullish. After that, price action slowly goes down towards the 50 moving average, and you see that the histogram slowly goes towards 0. So we are at minus 3.0. Yeah, it changes right now to minus 2.88. And if it goes underneath even more and below minus 100, we may see something similar to this or something similar to that candlestick. So the reason why I like this better than the MACD is because this tends to move much faster than the MACD. So it even moves faster than stochastic. So you have to go down towards 4 hours, maybe 1 hour chart in order to get the same speed as the CCI. So we can just look at previous, now probably not the best example of this. We can take another one. So for example here, so we have a drop. This is the New Zealand dollar and the Canadian dollar, and we have a drop here of the top of 0.92, and you can see that is also the top here. It's over 175, and then it drops all the way down towards 0.90, and you can also see that that is also where we are here in the bottom. So it is very accurate when it estimates when this is going to drop. It's of course a lagging indicator, but it moves significantly faster than, for example, the MACD. You can see the MACD is just underneath the signal line here, while we have the CCI that is significantly lower and is basically saying we are going to go significantly lower in this case. So yes, so above 100, above 0, that is bullish. Above 100, that is very bullish. Beneath 0, that is bearish momentum, and below minus 100, that is very bearish. So that is basically how the CCI works. So I use it together with the stochastic and the MACD. So these three indicators, if all three of them basically show the same momentum to the upside or downside, then I base my trades on that. The other two indicators, for example, the RSI and the Bollinger Band, this indicates whether or not we are oversold or overbought, and this basically indicates whether or not this is overstretched or if it's to the upside or to the downside. So when I scan for stocks or for indices or for currencies or whatever, I basically look at the Bollinger Band and I look at the RSI. Because the whole idea with my trading strategy is to get things that are significantly overbought and overstretched, and to buy things that are oversold and significantly overstretched in the opposite direction. So what happens is when people basically oversell is that basically they are panic selling in most cases. You can see an example of it here where people just sell, and technically you sell too much and then you go way past the Bollinger Band and you also get a very low RSI. And what usually happens after that is that you have a rally, either up towards the middle of the Bollinger Band or towards the top of the Bollinger Band. So this is a very good example of what basically happens when you get outside of Bollinger Band at the top. You break down, go all the way to the bottom, and then you rally up. So You can scan for this on these kinds of platforms. I've done my own scan. You can basically program your own scan that basically focus on specific things. For example, I focus on when the basically Bollinger Band is outside of the top here or outside of the bottom below. So you can do different kinds of scan. So when I scan for stocks or currencies that are outside of the Bollinger Band, I intend to sell, and when they're outside at the bottom, I intend to buy them. So, but we can have things that are outside of the Bollinger Band to the bottom and still have a fairly high RSI. So the best thing is to have an RSI that is underneath 30, because then it is oversold, and then also have the same instrument that is outside of the Bollinger Band. Usually it can be that you only get one of those, but if you can get both, then it's a higher probability that you will have something that basically bounces back. The same goes for the upside. You can have a stock that has been significantly bought and is overbought or overstretched, and then you have an RSI that's probably at 60. So it has to go above 70 in order to be overbought, and it has to be outside of the Bollinger Band, for example. So I haven't made a single trade in the foreign exchange market this week, and that is not very usual. But there are a few trades that I have been looking at, and they have to get into the right position in order to start buying them. For example, I would never ever enter a trade if it was right here. I would focus on a trade, for example, like this, when it is right at the 50 moving average. So this is one of those trades that is looking really good in order to buy. The problem here is that we still have these technical indicators that are fairly bearish at this point. So we have the MACD that is bearish, the stochastic that is bearish, and also the CCI is bearish, and the RSI is basically in the middle, and the Bollinger Band is far away from the bottom. So we could rally from here, but it would be a very minor rally. It would probably look something similar to this, and whether or not to chase something that increases by 20 or 30 pips, maybe, give or take, that is probably not worth it. You can probably look at this trade here and look at the RSI. Sorry, I have a little bit of connection problem here.